Hey everybody, this is DayTraderRockStar, and this is an updated video. We're going to call it a market radar. We're going to call it a welcome back from vacation. I'm going to call it what the hell happened while I was gone video. Man, today I was back into the office, back in front of the screen, and to tell you the truth, I've been out of touch for the last week on vacation, and really a lot of commitment in that vacation I had to do, so it was pretty hard for me even to touch base with the market until the day I was arriving home, and I turned on CNBC on the airplane and saw the market down 1,000 points. um, I tell you, since that point I haven't been sleeping too good. um, Market definitely caught me by surprise. I made some mistakes by not preparing myself for my vacation. So coming back here, I took some bruises. It's definitely taken out of a lot of my positions, and it was a wake-up call for me. It was definitely a wake-up call. I knew I was kind of, stretching the limits there on, continue to run with this rally, even though we were going sideways. Things were looking pretty good. I had some positions, but I definitely, wasn't. Was expecting a little bit more upside, and definitely didn't expect the size and the type of pullback we had. A fast, quick 2,000 point drop in the Dow, and that's a pretty fast thing. So we're going to talk about that today. And I actually have already been remotivated. I wanted to just motivate myself, get back on my feet. You know, uh, Plan out a kind of a battle plan going into the next week. Seeing this market right now live, you can actually see the market here pulling off, and you've been seeing the ranges. I mean, last night or this morning when I woke up and the Dow futures up 500 points. This is historical stuff. We've had the flash crash, we've had other big sell-offs and stuff, but to see that type of action overnight and continue to see it, it's amazing. It's almost like something is different in the markets. Maybe it's the algorithms. Maybe it's just uh, the volatility has just spiked up, and the moves even right now. Like I said, the S&P was just down 13. Now it's down 9. We're making moves overnight, or tradable moves. We have a triple setup right now, push back up to 20 things that we cover each day, and that's what's going on. I'm sure it's going to slow down. We're going to tighten up the range, but for the time being, very volatile, and it does. We want to concentrate on how far this market is going to go down, or um, if this is a tremendous opportunity. And I want to just give you my thoughts on that. You have the daily S&P cash chart right here. You can see the action. I went to on vacation right here. It was my last day in the market was I think the 17th. So the next day or the 18th, I was out of the market, and from that point on, it was just a bloodbath, and it got worse and worse. And even today, when I returned, we had a nice pop this morning, but we gave all that back up, closed on the lows. Now, I talked about this on the radio today at DayTradingRadio.com. I'm a big believer in, letting the market play its moves based off of momentum and, overbought and oversold levels. And, volume profile levels, some technical levels we want to watch. In this case, my key indicator when I come to, looking at the bigger trend is the stochastic oscillator. And we don't get the daily setup as much in a bull market like this. It just continues to be very strong and pushing. But when we do have that daily setup, for the last 3 years, we can go back here, take it that this one was a little choppy back here. And remember, last October we had a situation in the market that caused the market to kind of flush out and get a little selling in. And it was a nice retracement right there. It was a nice pullback. It was a nice little, we won't call it real correction. Was it a correction? I don't think it was a correction. I forget what the percentage was at that point, but I don't believe it was. But now they're saying we are entering correction territory in the markets right now. But the fact is, want to go back and concentrate on this oscillator, and seeing that oscillator get oversold on the daily chart. It's just a matter of between I would say within a week time when we start to get oversold here, we start to see the market here start to stabilize and move back up. In some cases, it's a quick spike down, and we got a quick spike up with a reversal candle or some kind of candle that we could really dig our claws into and analyze and see the reason behind it versus just getting down there. We haven't gotten a move up here. There is a slight possibility of a continued weakness, and that would cause these stochastics to kind of embed themselves on the lower level here, and that would be very negative for the market. But for right now, when we look at this, when we look at the history of what the market has done, we could go back out for 3 years, and I've circled each one of these zones and really placed an area, and you can see that just represented a pullback, a correction, so to speak, an opportunity in the markets where you just did not have that before. And each level, even here, I could put some more. I didn't put all the lines in here, but I could just fill the rest of those lines up there. But you get the picture here. I'm not. It's not smoke and mirrors here. This has been a very accurate setup here. So the one thing that we have to always understand, though, not everything works out as planned. There is times when things do break down, and but this breakdown comes and it actually sets us up again with that oversold oscillator setting up at oversold levels. Did it take a drop like this to get it oversold? Would it have been better to take an organized pattern down here, or as I said today, kind of ripping the Band-Aid off and getting what we needed done in this market, a pullback? The market here, and again, a lot of this is my personal opinion, but the market here, everyone was waiting for it to come down. It was up here. It was very nerve-wracking. I don't think anybody was really committed in this market. The volume dropped off. The VIX was, just killed. And, the summer months here, and overall, everything was just so dull. And that was probably because of lack of conviction, a lack of confidence in the money or in the markets. And people saying, damn, I want to have a better opportunity. I'm not going to get in here. I have no idea. And that's what happened. And this is a blessing for those out there. It's now all of a sudden you're seeing the interest come back in the markets. I could tell that definitely from Day Trading Radio, which we could always get a spike across the board here in viewership and membership, especially when the market is actually going down. And that tells you something. The people were waiting for something like this to happen. Now, the hardest part is kind of be, stepping up to the plate in a bloodbath. So I want to go over on this video, maybe another video, especially for the members, strategy I want to put into play, and the levels I'm going to be starting to buy this. I'm going to be using some of the leveraged ETFs to start buying a position down here in the S&P. All right, and I'm liking that. We've talked about this all day on the radio, and we go back out to this. We go back out. I want to just zoom out here. To Monday, and this is today's market. You can see we actually had a couple good pattern setups today. We had a wedge pattern, a lane divergence, and a nice pop, and then we broke it down. We actually caught a couple trades in the SPXU, and then we had this bear flag, which was a textbook divergence on the cash chart. I should go over that too. I'm going to jump all over here tonight, but there were so many interesting levels here. We talked about this setting up into the close. I was saying be careful here. This does have this bearish feel to it, this choppiness that we were chopping sideways, yet the stochastics were kind of slowly grinding up. And with that happening, we had that 5-minute set up perfectly. And the 5-minute, we were able to really time much better. And here it is. Do you see the sideways consolidation? Let's get rid of this big gray area. And let's zoom in here. Now, while you're seeing this this level, this little candle here, when we kind of mark off the lows, I'll put I'll start that range here from that point down to wherever it is. I just throw it in there to kind of give you that. Understand that we're starting to notice a divergence. As you start to see this push back up, you're not really breaking above that recent high. All right, that's what you want to normally see. If you're at the low here on the price should be following suit, and then we should move a little bit higher. We don't really pull above that candle, that initial candle. We start to curve back up here, and it takes time to see these divergences work out like this, but typically you can start to just say, hey, there's something not really working here. You're going sideways. We're not really moving up with the stochastics ramping up here. and from that point on, once we touched that overbought level, we rolled over, and that's what we were looking for, and a big sell-off at the end of the day. So there was actually some great signals today, and I look forward to tomorrow. So, that's something I'm definitely looking forward to. It takes a couple days to get back into the groove in the market and be being off and away. So and coming back to this type of volatility. So I want to go back here. We're going to discuss a setup here. We're going to zoom out a little bit more. Let me zoom out. And we're going to go back to Monday when I got on the plane. About 10 o'clock, 10:30. Market opened up and proceeded to spike down over 1,000 points on the Dow. I don't know what the exact read was on the S&P. But we came down to about that 1831, 1830 area, give or take 5 points. I'm not going into I'm not pulling out the protractor here, but you can see that's the area we look at. And this is typically called, the crash site. And what happens is the market pulls away from that. It never really gets going, and there's always the danger of us going back and retesting. There's a tremendous amount of volume back here that was traded during this. So again, if we probably get our volume profile guy FT on here, he'll probably mention the amount of volume down here and how the market tends to go back and retest these levels. All right, and this is one of those markers. This is a marker, and an important marker as it is, and there's a great chance that we actually come back and retest that. Now, do we go lower from that? Do we bounce? Do we touch it exactly? Do we, it's a tough call, but I would look for this as a definite area, and our trading plan, or my trading plan going into this, is to actually concentrate on this level instead of getting dealt a below overnight, holding something tremendously long or short, or a higher amount of shares or whatever you're holding, because now the market has been extremely volatile overnight. And I want to look at an area here in that 1830 area, even if we start to break down. But as we approach that, I want to be looking to buy some of the ETFs, the higher leveraged ETFs, and I want to write out a trade plan on that. But you'll see us do that on the show. And that's going to be around that, let's say, 1840 area. We'll put some alerts in here. We'll see what happens as we get down there. But very, very lightly, experimenting, 10 shares here or 20 shares, depending on whatever. I put that as a generic, call versus, trying to guess whatever one size is. I always tend to say, all right, I want to just show it by example. I want to buy 20 here, buy another 20, buy another 20 as it chops around, and you get a good base there. You want to definitely take this position with your indicators lining up also. You don't want to, if it's obvious that we're seeing some selling, there's obvious news there, I'm going to step to the side. But if we get down to this level, and this is a level that this is where I want to start placing or putting a position in, and managing that position. If we move down a little bit lower, add a few more shares, because we should get a tremendous bounce from this or soon after. We're talking about 1800 to 1830. We get down to that 1700 level, high 1700s again, but never being in a big position until we get the all clear, and then we should be already have a really good position established and a really good price. But that's going to be all detailed out for you. So I'm just going over the basic plan right now, and not showing you any numbers or figures yet. But I'm going to get those charts out to you more towards the people on the site there. So what else we have here? So again, talking about tomorrow, futures are currently lower. That is going to mean nothing by tomorrow. The way this market is moving, we could be up another 50 points on the S&P tomorrow. It really is going to be interesting to see when Asia opens up, what kind of news comes out of the Asian markets. Of course, the European Open overnight, and some other things. Another thing to kind of discuss here is, is this an opportunity? It's like I said, I go a lot by what I'm seeing on the charts, but I'm also really love to look into the news and what's causing this and what is the main reason behind this. Is there a viable reason? Well, China and the fear of the China slowdown, yeah, definitely could be a viable reason, but it's almost you just almost don't believe it, that that's a good enough reason, because it seems like the Feds, the big banks of the world, the big world banks, have a well, I'm not even going to say that. I guess that cannot be true all over the place, and even though the bank of I guess the Chinese Federal Reserve, equal to that, have been stepping up now and doing things, and they are kind of labeling that a reaction to the markets instead of them doing a normal process which should be done. But so they are reacting in a kind of a way, and we're going to see what happens with that. But let's get back to our economy and why the market, why we're getting affected. Is this all China? I think it is. I think there is a lot of Chinese news embedded in here, and that doesn't mean much for our economy. I mean, our economy is hanging in there. It's been hanging in there, and the market has been just showing that hanging feeling. So, the reaction here, the fast reaction, the fear that came in, the volatility that spiked up. I'm not going to say that we're not going to go lower. I'd actually like to see us go a little bit lower, but I think there's going to be a great opportunity, and that is going to be, a signal, just like it has been for the last 3 years, that dip buyers are going to start to come back in to this market, and they should start coming in soon. Like I said, we could look back at the historical charts. Is this the big one? Is there anything that's going to, kind of snowball into this market? Can't really tell right now. We'll make that decision if we, or cross that bridge when we get to it. If there is something else out there that stuns this market, in our economy. And we have the elections coming up. That circus should be interesting. But it all comes down right now to what's been playing out. Is this a better opportunity? Is it just an opportunity in a bigger uptrend? We zoom out here one more time, and you can see the opportunities that have come and gone in this market going out the last basically 2 years now, and I could probably even go out further. Now, there's one more time frame I want to bring up for you. And this is just, everything else that's happening, it's just happening down here. It's just getting oversold, and we're down here. So that it should be interesting. The other thing we're going to look at is that weekly time frame. Now, the weekly is even a bigger time. Of course, it's a bigger time frame. You can see we're starting to get oversold. We're just starting to get down there. It's not very rarely do I look at the weekly. But, when strange times are upon us, I just take a jaunt at it, take a look at it, see what it's looking like. And it's just interesting that we are starting to get oversold on the weekly. So something to be said about that. The 200 period moving average also underneath us, 1767. That's 1767, 1770 area. That's about 100 points below. It's about 100 points below exactly. That's kind of crazy, huh? 100 points below on the S&P. That could come pretty fast on a weekly too. So we got these levels, and if 1780 is 67. That would bring us down underneath. Little flash sell-off area, but you know what? Again, we're still looking at. There's a bigger chart here. Should be an interesting day. We're going to watch this a little bit more on the weekly. I'm not paying too much attention to it. Just wanted to show you it was getting down into oversold levels. The main part is, the trading plan going forward. Definitely looking for a a possible test, a retest of this spike low down here, and then from that point on, we'll start measuring out a position, start building some good positions, and expect some kind of action at that point, if not sooner, you know. And if it's a little bit lower, I think we'll be fine also. But, you know, everything is setting up. We might not even get down there with the daily getting oversold. The 60-minute, we didn't touch base on that one more time. Let's take a look at that 60. Yeah, that 60 tomorrow. If we get that 60 to pull back, that daily will be oversold. We get down to that level, things will be looking interesting for a bounce. So that's it. That's about it on that. All right, I want to let that go. I want to start working on another video, and we'll see you in the markets tomorrow.